How does crypto leverage trading actually work? Well guys, this is a question I'm getting so often from you guys lately, and I think right now a lot of new people are coming into the space. They are entering the crypto trading world and they are wondering, what is leverage trading and why should you use leverage for your trading strategy? So guys, that is the exact reason of today's video. Next to my daily market updates, I'm going to make some short videos where I'm going to try and explain the most simple things right in the cryptocurrency markets to educate the new people that are arriving into this space. So guys, all about that in today's video. With that being said, my name is Jeroen. Welcome to the Blockchain Today, the channel where you subscribe for daily crypto videos. And guys, before we are jumping into crypto leverage trading, let's all take a minute, scroll below this video and hit the thumbs up button. Guys, that would be highly appreciated. And for everyone who's already familiar with the concept of leverage trading and want to learn how to execute trades, you can watch one of my leverage trading tutorials. These tutorials are popping up right now on top of the screen. Then for the ones that understand already everything about crypto leverage trading and want to create an account to start trading with leverage, right now you can create an account on the Bybit exchange using my affiliate link down below. And if you use my affiliate link to sign up on the Bybit exchange, you can get an additional bonus of $620 US. And guys, that is a unique bonus at the moment. So yeah, for everybody who has already experience in trading, wants to sign up on a margin platform, Bybit is one of the best platforms out there. And if you sign up using my affiliate link down below, you can get this additional bonus of $620 US. So guys, what is crypto leverage trading? Well, first of all, if you want to trade crypto normally on the spot market, you can do that with just buying Bitcoin, right? You can buy, for example, $100 US worth of Bitcoin, and if Bitcoin's price would increase 10%, then your $100, your initial investment, would also increase with 10%. So would have a value of approximately $110 US. So guys, leverage trading works completely differently, and normally when you are using these leverage platforms, when you are buying Bitcoin, you are not exactly buying Bitcoin. You are buying contracts of Bitcoin. So that is very important to realize. Normally, when you are buying Bitcoin on the spot market, you are buying actual Bitcoin. If you are trading Bitcoin with leverage, you are not buying actual Bitcoin. You are buying a Bitcoin contract, and I will explain more about that later in this video. But the simple explanation of leverage trading is the following. So guys, let me illustrate this with a simple calculation. So let's say you own $3,000 US. The price of one single Bitcoin right now is $30,000 US. That means that with your money, the $3,000 US, you can buy Bitcoin worth of 0.1 Bitcoin. You can buy 1/10 of a Bitcoin. But here comes the catch, guys. If you would buy one Bitcoin, let's say with the price of $30,000 US, so you would buy 0.1 Bitcoin, and let's say the price of Bitcoin is increasing by 10%. So that means that the price of Bitcoin is going to $33,000 US. That means that on this trade, you would earn $300 US because 10% of your own initial investment right there of the $3,000 US is $300 US. So that is if you would be trading on the spot market. So if you would exchange your $3,000 US directly for Bitcoin, and let's say the price of Bitcoin would increase 10%, then you would gain 10% on your initial investment. So guys, leverage is working different. With leverage, you can actually borrow capital from the exchange to profit from the volatility that we are seeing with Bitcoin. So let's have a look at the same example. Let's say you own $3,000 US and you would apply a 10x leverage on that $3,000 US. That means that you can open a trade, you can open a order with the equity of $30,000 US. So you actually can open a order of one Bitcoin because the price of one Bitcoin is $30,000 US. And because you are applying a 10x leverage, the difference right here between $3,000 US and $30,000 US is $27,000 US. So this is the capital that you are actually borrowing from the leverage platform. Which means, guys, that if you would see a 10% increase in the price of Bitcoin, you actually gain 100% of your initial investment of $3,000. So let me make that a simple calculation for you. So you have $3,000. You are borrowing $27,000 from the exchange, which makes that you have $30,000, which equals one single Bitcoin. You open a long position, so you buy that Bitcoin on a contract, right? And let's say the price of Bitcoin is increasing from $30,000 to $33,000, so there is an increase of 10%, same as with the previous example we have been showing right here. Then that is an increase of $3,000. So that actually means that if Bitcoin would see an increase of 10%, then from your initial investment right here, we would see an increase of a 100% due to the fact that you have been borrowing capital to open this trade. So guys, that actually sounds quite crazy, right? Or you can borrow capital, you can buy Bitcoin, but it's not that easy or without any risk as it sounds. So there is no free money right here. That is very important to realize, because there is a very high increased amount of risk. Because guys, leverage trading always comes along with a liquidation price. So that is the catch. So let me get rid of the text right here, and I'm going to explain you exactly what the risk is right here. So let's say with that $3,000 initial investment, you apply a 10x leverage, which makes it possible for you to open a trade for $30,000. Open a trade for one single Bitcoin. If the price of Bitcoin will decrease to, let's say, $27,000, that means that from the initial Bitcoin price of $30,000 when you bought Bitcoin, we have seen a decrease of $3,000. That would mean that your trade is being liquidated and that you are being stopped out of your trade, and you lose that complete $3,000. And normally, if you would buy 0.1 Bitcoin with that $3,000, you would still own that 0.1 Bitcoin. So guys, your initial investment, which in this example is $3,000, is also known as the margin. So yeah, in this example, if the price of Bitcoin is $30,000, you are having a margin of $3,000 and you have a order value of one Bitcoin. That means that if the Bitcoin price will decrease with your margin, then yeah, you will lose your complete order. And you would also not own any Bitcoin because the trade is being liquidated. Let's say guys, the price of Bitcoin is going to 28,500, which means that that is a 1,500 decrease from the price of 30,000. Then you can see that we have been losing 50% on our trade, because 1,500 is 50% of $3,000. So guys, there are two sides when trading leverage, right? If you are on the right side of trading, so you open a long position and the price of Bitcoin is increasing, you can definitely get more profits than what you usually would get if you simply would buy Bitcoin. However guys, if the trade is going against you, you are losing as well in a more rapid pace than normally if you would just simply buy Bitcoin. So guys, let's have a look at the chart. Let's have a look at a couple of examples where you could apply leverage. So let's go to the 1 hour time frame right here. And yeah, let's have a look at a nice example of a trade. Right here we are seeing a pattern, right? Let's say this looks like a inverse head and shoulders. We have a left shoulder right here, head in the middle. We have a right shoulder right there. Normally we have a horizontal neckline right here. So guys, this is a bullish pattern, right? And normally when we break the neckline, we could expect an increase in the price of Bitcoin. So guys, if we were to measure the target of this inverse head and shoulders pattern, then we take the width from the neckline till the head and we put it at the point of breakout, then we can see that, yeah, this inverse head and shoulders pattern has reached the target. So let's say right here, when at this specific moment, when we are seeing a breakout out of the neckline, you would open a, you would be buying Bitcoin, right? You would be buying Bitcoin on the spot market just for a short-term trade. Then right there, if you would have taken that trade out at the target, you would gain a 7% or 7.3% on the amount of Bitcoin that you actually bought. So let's say you have been buying for $1,000 Bitcoin, then you would make a profit of approximately $73 because 7.3% of $1,000 is approximately $73. However, guys, if you would have opened a long position right here, the moment we are breaking above this neckline with, let's say, a 10x leverage, then you wouldn't have 7.3% profits. No, then you would have a 73% profit on your trade. That is the main reason why people are trading with leverage, because you can take advantage of the volatility that we are seeing in the price of Bitcoin. However, guys, it is very important to realize that there is a high amount of risk when you are trading with leverage, because the potential rewards to the upside, they are as well reflecting the potential risks to the downside. If you are trading with a 10x leverage and the price is moving 1% to the upside, you would gain 10% in profit, right, instead of 1%, because you are using a 10x leverage. But if the price of Bitcoin is going 1% to the downside, you are losing 10% as well. So guys, I hope this video provides a clear explanation about how crypto leverage trading actually works. Then guys, for everybody who wants to learn more about this subject, crypto leverage trading, I have been creating a cryptocurrency trading course where I explain in very detailed videos everything about these cryptocurrency markets. I will explain you how you can execute certain orders, how exchanges are working, how you can analyze the charts, but as well how you can create your own profitable cryptocurrency trading strategy. For everybody who's interested in that, you can find more information at theblockchaintoday.com, and I have a link to my website down below in the description as well. For everybody who wants to start with leverage trading, I would recommend Bybit or the Femix exchange. And right now, if you sign up on Bybit using my affiliate link down below, you can get an additional bonus of $620, and you can even get a $20 bonus without any deposit requirements. But okay guys, that's it for today's video. I hope you all enjoyed this quick explanation about crypto leverage trading. If so guys, take a minute, scroll below this video, hit the thumbs up button. I wish every one of you an amazing day, and if you haven't seen one of my amazing tutorials, you can go over there, watch one of those, and I will see all of you in the next video.